Welcome back. I'm Linda Kincaid. Well, the losses may have eased today, but it's still been a first quarter traders on Wall Street want to forget. Today marks the end of Q1 and all three of the major US stock markets have lost value, the Nasdaq worst of all. And the risks to the US economy are growing. Goldman Sachs now says there's a 35% chance of a recession in the next 12 months. That's up from 20% in a previous forecast. Well, US consumer confidence has also plunged in recent months while we wait for the upcoming tariffs. Well, Rick Newman is the senior columnist at Yahoo Finance and joins us now from New York. Good to have you with us. So let's start with the risk of recession. Goldman Sachs saying it's much more likely than it was 12 months ago. Just explain why.
Tariffs raise costs, so everybody who buys stuff is going to be paying a little bit more because tariffs are a consumption tax. It's just a tax on imports. We import a lot of stuff to the United States, so assuming these tariffs stick and President Trump keeps them in place, it just means that prices are going to go up, so consumers are going to spend more for the same amount of stuff. That means they're going to be able to buy less stuff. Businesses will be spending more. That will leave lower profits, less investment. And this is just the way, one of the ways anyways, that you cut into economic growth. Now, for all the headlines and all the drama that the tariffs are getting, they are not on their own going to plunge the U.S. economy into a recession, but they're going to raise costs and they're going to lower returns for businesses at a bad time. I mean, obviously, we've just been through 3 years of higher than usual inflation that has stung consumers. People really feel burned by inflation. They want to see prices coming down, and it looks like they're not going to get it. They're going to get the opposite, which is prices going up.
Yeah, exactly. And not surprising then that consumer confidence this month slumped to a 12-year low. More Americans certainly concerned about tariffs and also potential job losses. What could some of these tariffs mean in terms of job losses?
Well, when costs go up, especially with all the uncertainty, our businesses want to know, what are my costs going to be next year, to the extent that I can say what those are going to be. And in a solid economic environment, they do a pretty good job of estimating what their costs are. If you think your costs are going to be higher than you budgeted for, there's a good chance you're just going to hold off on investments. These are a lot of things that sort of happen behind the scenes in the U.S. economy. It's not like a lot of people won't notice this, but when businesses cut investment by just 10%, let's say, that might be 10 or 20 or 30 workers they don't hire at a factory, or it might be one new factory they don't break ground on next year because they're waiting for the following year. So it's kind of amorphous the way these tariffs will affect the business climate. What consumers will see is slightly higher prices. They are preparing for that. They have been paying attention. That's why we have seen these dismal consumer confidence measures. People are not saying things are terrible today, but they're saying we think things are actually going to get worse, not better, and that's because of the tariffs.
And Trump has overstated some of the tariffs. For example, when his administration came out speaking about tariffs on dairy products, he said Canada imposes a 200% tariff on dairy products, when in fact, those tariffs only kick in once it gets to a certain quantity, and it's never reached that. Why would the administration push that false narrative?
Well, you have to get inside his head to explain that one completely. I can't do that. But there are many ways in which Trump is basically just trying to sort of lay the groundwork for the types of tariffs that he seems to want to put in place. Another one, Richard Quest was talking about this a few minutes ago, these so-called non-tariff barriers. So a country can have low tariffs on U.S. imports, but they might have other ways, they just don't let that many U.S. products into the market. Trump has also talked about this idea of a value added tax, which is kind of a national sales tax a lot of countries have. He says that is a non-tariff barrier to trade. Economists say it is not. We have sales taxes here in the United States. But there is something about tariffs. Trump just loves tariffs. He thinks they are a solution to almost any problem, and he wants to impose tariffs. So he is coming up with the rationale to impose tariffs on a country-by-country basis and almost on a product-by-product basis. So we're going to find out when so-called Liberation Day arrives in, I guess it's 2 days now, what he really has in mind. But I think we have to get used to the idea Trump just likes tariffs.
Yep, he calls it the most beautiful word in the dictionary. So we'll see what happens come Wednesday. But he has threatened tariffs in the past and walked them back. So I think there is some hope that that might happen. Rick Newman, senior columnist at Yahoo Finance. Thanks so much.
Thanks to you.